All right. So for today, March 28th, we're looking at a two-directional day. There's been upside and then there's been some downside. But what I want to show you and what I was just talking about, and I want to repeat it, when you're chasing an edge or an advantage or a tool in this business, they have to fall under an order flow or an intermarket correlation umbrella, and better if they're both. That's what drives price. As a consumer, those are the two tools you use to value prices of everything, right? Cars, plane tickets. We compare, contrast, and then if we can find the statistics on order flow, supply and demand, that's another great way to value the price. Here's an example. I want to say this, even though these are short videos. The example I always give is if you buy a car and you know the salesman and he gives you some inside information about order flow, that would be they're getting delivery on like 24 new cars tomorrow. So negotiate price with us tomorrow. You're in a better position. He gave you some order flow tips as to the dealership is stuck, right? They're stuck with inventory. So price is going to go down. If you knew that, you come back tomorrow and you have you're going to negotiate from a better position. Usually you don't have that information. And usually when you start trading in this business, you don't know what to do with the information of order flow. You don't know what it is. You don't know how it exists. If you get into it, you usually get overwhelmed because you look at too much. There is too much information, too many numbers, and you get over. And so even the footprint, it's, a screen with a bunch of numbers on it, unless you're able to separate for what's important. So getting into it, let's replay a moment where they had some upside. So you see, all we know at this point in the day is that it is up close to its highs and it's chopping sideways. Has a little red resistance that it's peeking through, but then it comes back down. You're waiting for some sellers to come in. We're waiting for selling to come in order to then anticipate the pop. Then we peak over, like I said, that's order flow. Then we peak over at intermarket correlations and take a look at what the NASDAQ is doing. Let's blow up this NASDAQ chart. Back at around 931, there's a couple things that you could see with the NASDAQ. You could see, number one, that it has some really nice swing highs, two of them, that it rejected from. Now, 931, 930 roughly is in this area. So we know a couple things. We don't know it's going to rally up to there, but we do know that it stopped there and it stopped there. If you know anything about trading, you know that markets don't continue to respect resistance when most people see it. So swing highs aren't going to just keep being swing highs forever. Retail community and traders think that. You guys won't. So you got two swing highs the market could take out if you're bullish. You have a consolidation high in here. This is before this rally, before this pop in here. So you if you're anticipating that, does it have some things to go after if it starts creeping above that swing high and that swing high? Yes, they could run through those. And once they do it, boom, they go pretty quickly. Now, from here in the NASDAQ to up here, it's a pretty big rally. It's almost like 15 points. I'm not saying you're trading the NASDAQ. I'm saying you're using that idea that you're always running with, that you're always thinking about, when you're also looking for a qualifier in order flow in the ES, if that's what you're trading. So let's play this 2 times the speed. Ah, shoot. Now I'm on this chart. Well, that's interesting. If you click on the chart, it's going to replay that one. But we don't want to replay that one. We want to replay this one. So let's play it. Watch this chart in the bottom left of your screen share. In fact, let's blow it up. There. Did you see that red come in? Do you see that red come in? 2 of them. 3 of them come in. And that was twice the speed. Let's pause it and rewind it. That was so good. That was twice the speed, rather. So it doesn't have to get you long. But eventually it could when you're good at recognizing that what should happen isn't. Aggressive selling's coming in, it should go down, it's not. They're stuck. They're potentially stuck. Then you tie in that NASDAQ idea and thought that they have some places to go on the upside. So you see what you're doing? You're combining order flow with intermarket correlations, and that overlap is where your edge is. Now let's play it again. Now we didn't have the breach of those reds come in yet. It's gonna dip down. I don't know it's gonna rally. All I know in real time in the room, I said when that red came in, look out above, because she can't. When I say she, that's the audio. Can't get it. Boom! I paused it. That red comes in. It's like, hey, they get above that red. The NASDAQ has some swing highs they want to target. They can get above this red. It's just be careful short if you're short, and if you're bullish, buy the damn thing. You have an idea of where you're wrong at. But if you don't do it, and we play this through, they start creeping above 20.5. She comes back, and this time it wasn't even close. She flashes in. I keep saying she because the audio add-on that I have for Edge Zones, the Edge Zone audio, is a female voice when it's a seller. She comes in 21 quarter. It doesn't even attempt to go down. Doesn't even attempt to go down. I punched a guy with all I had, and he didn't even flinch. He didn't attempt to go down. He didn't blink his eyes. I'm in trouble. Who's in trouble? Probably the sellers. That's the qualifier that order flow is giving you, that the market might be ready for a pop. And we're not just playing the instances over and over again, and you guys know this in the room, of the ones that work. When these don't work, we know sooner rather than later. That's what's important about qualifying order flow for positions, right? You've seen this come in a couple times, and I just paused it. If I shrink this screen back, the rally in the NASDAQ also helped confirm and keep you comfortable. What is this? It's the opportunity and ability to strip out randomness. And that's the only way you could turn learning into understanding, is when you have less randomness and you start making predictions that don't feel like a good guess.